Thank you for joining us. Welcome to Business Morning. I'm Chimezie Obi Iwago. Let's begin with what is on the business calendar for the rest of the week. How the Kogi State Investment Summit 2018 begins today in Lokoja, the state capital. This is the first time the state is hosting an investment summit in order to highlight Kogi State economic opportunities to an international audience, including policymakers, business leaders, academics, and finance professionals for a vibrant discussion on the way forward. With the theme, Harnessing Our Diverse Resources in Agriculture, Solid Minerals and Tourism for Potential Economic Growth, the summit will provide an open platform for dialogue on how the Kogi State economy can turn the new, seemingly less benign environment to its advantage. Also today, the National Bureau of Statistics is expected to release the January 2018 diesel price, petrol, kerosene and liquefied petroleum gas, otherwise known as cooking gas. That's the monthly report. Also, Civic Hive by Budget will today host a workshop on creative communications for CSOs in Lagos. And on Wednesday, February 14, the Central Bank of Nigeria is scheduled to hold a Treasury bills primary market auction. Treasury bills worth of 176 billion naira will mature, while an equal amount is expected to be issued in 91-day, 182-day, and 364-day instruments. Also, the National Bureau of Statistics will release the January 2018 Consumer Price Index and inflation figures. The HR Landscape Outlook Conference 2018 will hold in Lagos, while Paints and Coatings Manufacturers Nigeria PLC holds its annual general meeting. On Thursday, February 15, the National Bureau of Statistics will release the Transport Fare Watch and Selected Food Prices Watch. The 137th International Conference on Management, Economics and Social Science 2018 will also hold in Lagos on that day, while the 2018 JCI Nigeria Southwest Conference commences in Osun State. The Tourism Innovation and Development Advantage Conference, organized by Skyview Communications in partnership with other organizations, will also hold in Lagos on that day. That's pretty much the event on our business calendar for the rest of the week. And to the markets now. Global equity markets opened to a rout last week as the investors were spooked by the possibility of aggressive monetary tightening in the United States, and many have wondered if investors in the Nigerian equities market have any reason to worry. I'm now being joined by the head of Africa Equity at Exotics Capital, Asili Ewe, to talk more on that. Good morning, Asili. Thank you very much for joining us.
Good morning, Chini. It's always a pleasure to be on the program.
Right, the Nigerian equities market fell 3.4% last week. That's its largest decline year to date. And of course, the fall continued on Monday. Could a global sell-offs in equities be responsible for this decline in performance? And if so, how much longer is this negative sentiment expected to linger? And is there any cause for worry?
Yeah, look, I think that the correction that happened in the Nigerian market was expected. I mean, that you had a rout in the global equities market kind of helped sort of accelerate that process. But I don't think that Nigeria itself is significantly exposed to, some of the concerns that led particularly to the weakness in global equities markets. I mean, as you obviously know, it really stemmed from the fact that fears developed over an accelerated or hawkish, U.S. Fed interest rate hike over the next couple of quarters. I mean, Nigeria obviously does have some exposure to developed markets, or the interest rate movement could indeed have some impact. But I don't think that it should be that severe. It only happened that in this particular instance, the Nigerian equities market was, I would say, becoming a little toppy. And so following what had happened in global markets, it kind of made sense that some investors took some profit off the table. Very important to highlight that over the last roughly 6 to 7 months, the bulk of the rally we've seen in the equities market here has been driven by foreign portfolio investors.
Now, given the speculations that the sell-offs across global markets would probably persist, yes, you talked about market corrections, but some are speculating that it will probably persist in the coming weeks. What indicators should investors in the Nigerian equities market be on the lookout for?
Well, as I pointed out, I don't think that this is a significant risk. The critical issues are a significant risk to Nigeria, particularly, i.e., hawkish Fed stance, computer-based trading, which was, one of the drivers for the rout in global markets last week. So I think that Nigeria is somewhat immune. If you add to the fact that even though we've obviously raised quite a lot of debt actually over the last year, the debt is still relatively low to GDP in comparison to other countries. And again, I don't expect this unwind of quantitative easing to happen rapidly. I think that it's going to be well moderated. I think that for Nigeria particularly, the narrative remains quite constructive and positive in that the economy itself is rebounding from a recession. So I think that will more likely serve as a driver for market rather than developments in the developed markets. I think that investors will be perhaps more keen around on the downside, more keen to see what happens around the election. So I think that we're more concerned around what could happen going into the election cycle, perhaps in the second half of the year. Otherwise, relatively positive, data on, oil prices, oil revenue, inflation, and things like that should continue to, I think, help, the local equities market to continue to rally. I think that we've indeed had a bit of a profit taking, but that itself will serve as, a bit of a base for a rebound again in coming days. As you know, markets globally have also begun to rebound as well.